Ravi Sood, welcome to the Arlington Rapallo. Mate, what did you think of the Italian Riviera? Is this your first time here, or
It is my first time on the Riviera. Wow. Wonderful to be here.
thank you for fitting us in with children's birthdays and other commitments, which everybody has. And I know you had a busy weekend, so thank you for coming all the way to Italy.
Something I was really looking forward to, and it has not disappointed.
So, Ravi, we met each other a long time ago, and we've both been involved in junior mining. What have you been doing for the last decade? What excites you most at the moment about what you're going to do next in mining or in anything?
I'd really have to say mining, and specifically gold. And I think it's, I joke I was 15 years too early, as were many of us in many different ways. Um, You're really starting with the view that, and not an original one, that the debt issue globally, and in particular in the United States, is what I call a mathematically intractable problem. And there is really only one plausible exit path, which is a fundamental debasement of paper currencies, or
Right.
whatever we call money now. And to manifest that view, I started a gold company, and taking a page out of the book of greater minds than myself before me, trying to find the most leverage by buying high cost or marginal assets that maybe weren't worth very much in a low gold price environment, but could be worth a lot in a higher gold price environment, and give me, as the investor and the largest shareholder, maximum leverage to my investment concept, which was that gold would necessarily go much higher in dollar terms, and I wanted to be positioned for that. So that was that. I've had a number of companies that I've been involved with as an investor, board member, chairperson, over the last 15 years since selling my investment firm, and cause for us initially meeting. But the real passion, the real focus right now is definitely on precious metals, specifically gold, and the gold companies that I'm involved with.
Yeah. I agree. I think I was 10 or 15 years too early, and I've certainly had a few companies go bust in the meantime, but it feels like this is the real thing. I think here at Rapallo, we've heard in the last couple of days people that run gold funds saying everything's changed in the last 2, 3, 4 weeks, no more than that. That they've suddenly got people saying, "Oh, it's not like, oh, I've missed it. It's we're about to launch." And there's money coming to gold funds for the first time, which means for junior companies, there's money to go spend on developing gold mines.
I completely agree with that. And as somebody who's been a market participant, not just in precious metals, but more generally, and been through different bull and bear markets in different sectors, and more broadly, this has a very different feeling to it. In fact, it even feels quite different in my mind to the last bull cycle that we had, when gold went from 250 to almost 2000. And it was great. And those of us involved in mining, did very well. And there were lots of opportunities, not just in precious metals, but across the whole spectrum of mining companies and different sectors. But this one's different. It is a very different sort of investment thesis behind it. This very much the risk endemic to the entire financial system and the dollar itself,
Right.
as opposed to the China or emerging markets driven commodity supercycle. And it's happening, and it's happening very fast. And I think only with the benefit of hindsight, maybe 3 or 5 or even 10 years from now, we'll be able to look back and identify what really were those sort of critical touchstones, or turning points, or milestones that sort of set this off. Like, why now, and not 2 years ago or 5 years ago? All the same math applied 5
Right.
years ago as it does now. But we can guess at a few of them now. Weaponization of the dollar with Russia's invasion of Ukraine, the Trump administration, and a very different attitude, in particular amongst a couple of very senior officials, towards gold and the re-monetization of gold, and the role it might play in the financial system going forward, and a recognition that it may actually benefit the United States, which was not the case and certainly wasn't their policy, for gold to be much higher. It was, whether it was explicitly said or not, it certainly appeared to be the policy that gold not going much higher was in the interest of the United States
Right.
and preserving the dollar hegemony. But something's very different, and we've seen some subtle signs and some not so subtle signs. But I can say the arrows really started to change direction January of this year, 2025, and definitely coincided with the new administration in the United States.
Yeah, the guy that I've heard has opened my mind to this subject about what's changed specifically in the United States and why that matters for gold with the Trump administration is Ned Naylor from the Jupiter Gold and Silver Fund. We'd heard him talk earlier today, and I've heard him say it before, and he says, listen to how many times Trump talks about gold. He lives, the Oval Office is gilded with gold. He talks about gold. He talks about going to Fort Knox to see whether the gold's there. So I think what Ned's saying is Trump is saying he's going to do what China's done, which is hoard as much gold as you can and then revalue it higher, because the trillion or so dollars of American gold, if you revalue it much higher, actually helps fix the American balance sheet, which is what Trump and Besant are hard at work doing.
It potentially solves the otherwise mathematically intractable problem. And I'd say, okay, there's been some subtle hints, but it's some not so subtle hints, like Trump tweeting, "He who holds the gold makes the rules."
Right.
And Scott Bessent, and what I'd call, this could be one of the things we look back at 3 years or 5 years from now. Scott Bessent, Treasury Secretary, being interviewed by Tucker Carlson, and saying explicitly that maybe it's now time for gold to play a more clear role in the money system, and that may be the path forward to a new hard money system. He says it in so many words in a public interview. So there's been some subtle signs and some, hitting us over the head with a baseball bat kind of signs as well.
Yeah. Ravi, can we talk about your role as NED of Elemental? Because Elemental is an important company in the context of the royalty business because of their main shareholder, Tether, who I know you know well. And Tether's probably the most important marginal buyer of US Treasuries, and has also launched Tether Gold, which is an important new buyer of physical gold. Can you talk about what is the vision that Elemental has, and what is Tether's vision and how it relates to the gold industry?
Yeah, well, first of all, I think it's a big deal. It's a big deal to the gold sector, and it's a big deal to the future of money, I think, and it should be interpreted as such. Why is that? I think one mistruth or misconception is that, well, Tether's got all this money, they got to figure out a way to do something with it. That, yes, it's a very profitable business, but that's not. Their investment in Elemental is looking for a return, and an above average return, and a smart use of their money, and that's governing all their decisions. So first and foremost, they're trying to earn a return on that money. That's maybe the least interesting part of the discussion, but it is very much return oriented. The more interesting part is that let's look at what is Tether. So Tether, largest stablecoin, now very important counterparty to the U.S. government, rolling $170 billion of treasuries every month. Huge participant and extremely important participant in that market. One that seems to be very much favored by the U.S. administration and part of getting the Genius Act passed. Again, very important legislation for Tether and for anybody in the stablecoin industry. And you have this group that's now so important to the US dollar and the functionality of the US dollar, extending it above and beyond what it already is, making major investments in gold, and on their own account, in one case, getting leverage for themselves to the gold market through investments in things like Elemental. Very smart investment in a way of leveraging an existing management team and portfolio to get into the royalty space. Maybe the best way to get leverage to an appreciating gold price, but also through the launch of Tether Gold, tokenizing gold, leveraging their existing infrastructure, the existing trust factor as being the largest stablecoin company, $175 billion of assets that have tokenized in the form of USDT, and being a very trusted name in the space. What they could do by tokenizing gold and making it a large and liquid market for gold is enormous. That could really enable the next move in the re-monetization of gold. And it appears to me, as someone somewhat on the outside of it, that this is something that is not opposed by the US government. In fact, it's something that's supported by them.
The Genius Act.
The Genius Act. It's there for all of us to see. So they're out in the open. They're doing this based on past track record of success. I have no doubt that they're going to be very successful with this. There are other good people, some really good people out there trying to tokenize real world assets, and in particular gold. They'll have a challenging time trying to catch up to what Tether already has in terms of not just the infrastructure, but reputation and trust factor that they've built up over the years and through their success with USDT. But it's a really big deal. And if you're talking about billions of dollars now flowing into tokenized gold, opening up an entire universe of new buyers who now find utility in the token form of gold, that is an enormous amount of physicals. It's going to be backed dollar for dollar, ounce for ounce with real gold, vaulted gold, supporting each and every ounce of Tether gold that's issued. It's an enormous new player. It's like, how Tether is overnight or in the last several years become, one of the most important players in the treasury market. They may very well be the most important player in the physical gold market.
Right.
Out of nowhere.
How big can Tether Gold be? I think I heard, well, actually, here's a couple of reference points. When you and I met with your executive chairman of Elemental at Beaver Creek, I think the number then was Tether owned $8 billion of gold. And then today we heard that Tether owns about $10 billion of gold. So the number's going up quickly. How big can Tether Gold be?
And so you could throw out a few numbers. So there's about $250 billion of gold in ETF or ETF-like products.
Yeah.
So that's one number. That's maybe not a new buyer of gold. That's just sort of column A to column B, or maybe not, because we're not sure how much of that outstanding gold that's held in ETFs or other financialized products is actually backed by ounces of gold sitting somewhere. So it may not be a completely sideways trade, but that's 250 billion round numbers. And I think you could use as a realistic number for demand. We've seen the demand for USDT go up to almost $200 billion and trading enormous volumes on a daily basis. You could use pick some fraction of that, and that's a realistic target for the next 2 or 3 years for Tether Gold. The limiting factor there may very well be how much physical gold can they get without completely disrupting the price. Yeah. And if you say, okay, well, they've got $10 billion of gold now, and let's just say over the next 2 years, the gold price triples and it's $10,000 an ounce, that 10 billion is now 30 billion. If they want to get it to on the order of $100 billion of gold, it's another 70 million ounces of gold that they have to purchase. I mean, that's mission impossible. I mean, that 70 million ounces doesn't exist. That's sort of like 60% of annual production of all mines combined. Yeah. Much of that's already spoken for. You just can't get it. I mean, even at $10,000 an ounce, it would sort of be ungettable. So that may be the speed break on limiting it to a mere 50 billion or sub 100 billion over the next 2 or 3 years. But based on what's in place, where the demand is, I would be really surprised if it's not tens of billions of dollars in the next 24 months.
Wow, yeah. No, it certainly seems like that's possible. And I think the point about the limitation of growth is the supply of physical gold is a fascinating one. And of course, normally the way you increase supply is to increase the price. And the question is, well, how much do you have to increase the price to increase the supply if you have a lot of demand? And then a further thought is our discussion earlier about the future of money here at the Arlington Rapallo on the US government's or Trump and Musk's commentary about, is the gold in Fort Knox? And if it's not, then that's a setup for, well, physical gold is suddenly rarer than it was if the physical gold from Fort Knox is not there anymore, for the revaluation much higher of gold. And I don't know when it would suit Trump to unveil that possibility. But it seems like during the life of this administration.
If I could throw out a bold prediction, I would say if I was coming to within a year of the end of my administration, it would be a pretty neat trick if I could send gold price higher, revalue it to market price. I think it's currently valued in by the United States government at $42 an ounce as the official price.
Yeah.
And through the accounting rules of the Treasury, pick up several trillion dollars of basically conjured money, just following their own rules, and run a budget surplus for years 3 and years 4 of the administration. Somewhat fictitious one, but really accomplish what's otherwise impossible, which is sort of fix this intractable debt problem, debase the US dollar, and inflate their way out of their debt issue. Great closing act for his administration.
Yeah.
Just an idea. But looking back at that commentary, the Fort Knox, the things he's tweeted, things from Scott Bessent, the only narrative that makes sense to match up to that commentary is that they actually want gold to go higher.
Right.
And Simon, give me one line from any significant person in any U.S. government administration for the last 50 years that was positive on gold.
Right. It's always been the opposite. Yeah.
Can't do it.
Yeah. No, it's always been either tacitly or implicitly implied that the US dollar wanted a strong dollar, US government wanted a strong dollar, but now no more, it seems, under the Trump and Bessent administration. So Ravi, understood, Tether is important for gold. Gold's going a lot higher under the Trump administration. I mean, we're all in our own echo chamber here. We all want to believe that, and hopefully we might have been 10 or 15 years too early, but maybe our time is coming. What else are you doing in terms of specific junior gold, junior mining that's exciting you at the moment?
Well, the way I manifested this investment thesis, and as we joked, a decade or so too early, is I started a company called Golconda Gold, and I sought out assets, number one, that I could get, but also that were manifestations of my investment thesis. So if I were to believe that gold price was going to go much higher, the assets that would give me the most leverage are ones where they're high-cost producers. They could be purchased for a price that was lower because they were not deemed strategic or core to a mid-tier or a big company. And that's what I did with Golconda. So I've purchased 3 mines over the last 14 years.
Okay.
One of them was one with no reserve left in it, or less than 18 months. I extended that. I operated that mine for 11 years. And interesting observation about the relevance of price to the gold market. I produced 332,000 ounces, all in sustaining costs below 1,400.
Was this the Mopani mine?
This is the Mopani mine in Botswana, purchased from IM Gold.
Yeah.
And over those 11 years, I averaged just under $1,400 an ounce gold for sale price. So retained earnings of almost nothing. If I had that mine now, of course, with $1,400 AISC, producing 35,000 ounces a year, it would be making a lot of money, but I don't. I sold that to the management team. It was in its denouement.
Okay.
But during the life of that mine, I was able to purchase 2 other mines that were in care and maintenance. One in South Africa, the Galaxy mine, 2.4 million ounces, was viewed as a difficult, high-cost mine, high arsenic content, refractory ore. I bought it for a bag of magic beans, basically. Similarly, I bought another mine on care and maintenance in New Mexico during COVID. Underground mine, too small in the United States, but somewhat geographically isolated in New Mexico. Again, I bought it for what, in hindsight, looks like an unbelievable price.
So those are in Golconda today?
Those are both in Golconda. Now, South Africa we have in production, and very modest production levels this year. We're just ramping up 1,000 ounces a month, but our AISC's about $1,400 there. Okay. So at today's gold prices, very profitable. And with a huge resource base and our existing mill and plant, we're ramping it up to about 4,000 ounces a month over the next 4 years. So about a mid 40,000 ounce producer on an annual basis. Summit Mine, which is in New Mexico, we're restarting that one in Q2 of next year. And part of the issue with that, I've been sitting on it for better part of 5 years. Why did I do that? Well, I'm the largest shareholder of Golconda, and I've had this thesis, and I thought it would play out a long time ago, much faster than it has. but it's, it's playing out now. And for me, could I have gone and raised some money and started the operation in New Mexico sooner? Probably. Not much sooner, because there just was no money to be had in 2022 or 2021. But I could have raised some money a couple years ago or last year and done it. But I've waited, and I waited to get South Africa into production, and now I'm profitable in South Africa. And in fact, so profitable that not only do I not need any equity to start the mine in New Mexico, I don't need any debt. I'm able to do it all under my own steam, which for me as a shareholder and for all the other shareholders is a far preferable solution.
Nice.
And also from an operating point of view, now I've got my first operation stabilized and profitable. I no longer have a war on two fronts, so I can refocus some of the energy on starting the second one.
So does Golconda produce net cash of its G&A each year?
Absolutely. So in fact, we've got 2 quarters released and on the books for this year. So that's in the public domain, over $4 million US of operating cash flow in the first half of this year. G&A at a corporate level is only $2 million.
Wow.
So we produced free cash flow in the first half of the year. Average gold price was much lower than it is today in the first half. I think we averaged about 2,700 in Q1. So I'll leave it to the reader to extrapolate, but Q3 and Q4, we've demonstrated, though we haven't not into Q4 yet, but we've ramped up volumes, and we've shared that with the market. And you can apply today's gold price. We're unhedged, and we're generating even more cash flow. So you can look at that first half number and more than double it in terms of cash flow generation. That's with just 1,000 ounces a month of production, very modest production.
Nice. Well, that just keeps ticking over and paying the bills. Is there an exploration opportunity in either asset?
I'd say absolutely there is, and it has not been a focus of ours at all, and I'll tell you why. So we have 2.4 million ounces, all categories in South Africa, and we're ramping up to a run rate of 4,000 ounces a month. It seems too small, and I suppose it is relative to the resource base. That mine, by the way, has been operating in some shape or form since the 1870s.
Oh, wow.
It will be operating long after any of us sitting here are on this world of ours. So it's got a lot of gold. We could definitely expand that resource, and barring something really spectacular, it would not have any effect whatsoever on our mine plan. So we're the beneficiary of a century worth of infrastructure, underground workings, adits, declines, all sorts of infrastructure there, shafts. To materially change the mine plan and the throughput would involve a substantial capital expenditure. It could very well make a lot of sense on a spreadsheet, but for me, as somebody who's okay, we've done the hard yards, we've got it into operation, we've got it profitable. It's a great plan to ramp it up and to get it to that steady state production, and maybe harvest cash at that point, whether it's a dividend, it's a share buyback, or it's reinvesting in operations elsewhere where we have diversification geographically, diversification operations wise, and risk management. So I think you'll see us do some exploration, because it's just too tempting not to, and it's not very expensive doing near mine or in mine exploration. New Mexico is a different story. So New Mexico has a very small resource base, it only has a 7-year mine life. Most of the work was done there where gold was $3,000 lower an ounce, and silver was less than a third of the price. Okay. So we're redoing our 43-101 report actually on both assets. I expect there, again, I won't make any predictions other than to say with a much higher commodity price, should be some change to those resources without having done any drilling or exploration. But with the higher commodity price and the fact that no work has been done on the exploration side for 15 plus years in New Mexico there, we will be doing some exploration there. So we will extend that well beyond the 7 years. The grade's over 8 grams a ton. There is no way there's not more economic ore at that mine.
Wow.
At $3,700 gold, $40+ silver.
So could you see Golconda buying additional assets either in New Mexico or South Africa or anywhere else?
Yeah, absolutely. And it has not been a priority for us because we have so much growth organically. And again, I've turned into a bit of a zealot over the over dilution and just hanging on to my ownership of the company. So I've been loath to dilute, and I survived the sort of dark years without diluting.
Good for you.
We'll be very careful with our next move, but there's opportunities out
So
there.
what do you own of the common share, and are there any other interesting
So
shareholders?
yeah, between myself and family members, we're about 30% of the company. Another board member and his family owns just over 10%. So board members and management over 40% of the company. Beyond that, widely held.
Okay.
There are no institutional shareholders, and we're tabula rasa. We've done one financing in our 14-year history, and that was to raise a bit of cash to buy the asset in New Mexico during COVID. That's it.
It's listed in Canada. The ticker
Listed
is
TSXV and OTCQX.
the ticker.
GG in Canada,
And
Gordon Gecko,
That's a good. Oh, right.
Golconda
Okay.
Gold, and GGGOF in the US.
And is it what's the market cap today?
So we are just shy of $2 Canadian and 72 million shares outstanding, so about $135 million Canadian, just shy of 100 million USD.
Interesting. Interesting. I shall take a look. Anything else you're excited about that we should cover while we're here, or before we go and get a cocktail?
I don't think I could be any more excited than I already am, Simon, but the cocktail sounds exciting too.
Good. Ravi, thanks for coming.
Thanks for having me.
Look forward to seeing you next year. Thank you.